What is up, YouTube? My name is Aditya, and welcome back to my channel, The Indian Algo. And in this video, this is the part two of our higher time frame to lower time frame analysis. And it's been a while, guys. I know I haven't uploaded any videos as of now because I've been busy with a lot of stuff. I'm working on a company, and those things are definitely time consuming. Also, I have a lot of mentees, so I have to give them time as well, because of which I'm unable to upload any videos. But from today onwards, I promise that I'll be uploading 3 videos every single week for sure. All right. And before I head on to this thing, I need to also make sure that I'm providing you guys a lot of value. So I have dropped down links to connect with me in the description. It is pretty tough for me to reply a lot of DMs on Instagram. So I've been missing a lot of DMs, guys. So you all can check out the Discord server. You can join in there. Also, I have dropped the link to the Telegram group, which is free. And we keep on updating our trade ideas on Telegram group more often. So you guys can join that as well. Also, we have a webinar coming up on this Sunday. So the link to that will also be there in the description. You can join that as well. And yes, so let's proceed further and let's see what we discussed in the previous video in the first part. So if you see here, this is what we discussed in the first part, that we are supposed to mark the lows and the highs, or we have to support we are supposed to mark the most obvious highs and most obvious lows in these scenarios, right? So now what we need to see is we have to anticipate where the prices could run towards. So as of now, if you see here, when the prices were, I guess, somewhere here, all right, I'm not sure, yeah, probably somewhere here, we saw the prices that we saw that the prices are gonna take out these equal lows because we have liquidity around this area. Now, this is the price action that you need to anticipate and understand that once this takes place, prices are very likely going to reverse back up. So now if you see how nicely this low was protected, once it got hunted, look at the protection here. Not even a single candle right here could close below it. Now that is a sign that the prices are being bullish. And if you see, we also marked a gap around this point. So once we understand that this low is taken out and the prices are not willing to push lower, all the lows are being protected here. What we see in this case is that the price runs towards this gap and price fills this gap. Now, once this gap is filled, this is where we then try to understand where the next price action could be, like the where the next move could take place. So if you see, the only high that we see as of now here is this particular high. So I want to anticipate and see the prices coming here. Now this is gonna be my range. This is where I want to initiate good trades. This is where I want to initiate only long trades. Obviously the prices could push higher and then fall down like this, but I want to only be involved in long trades. The reason is very simple, guys. The reason is that the prices will run towards those lows. So if you see how the prices ran towards these lows, so there is a high probability that the prices will run towards these highs. Now how do I understand what's gonna be my next step? It's very simple. We need to understand market structure. So I have already uploaded a video on market structure where I explain in depth about how market structures work. And in this video, I'll be trying to make you understand the same concepts about market structure. So let's say we have this now on Nifty. I prefer doing the analysis on the SGX chart. So let's go to the SGX chart. So if you see here, this is what I have on the SGX charts, SGX Nifty. So let me first tell you how does a structure works. How does a structure works? So as the prices push higher like this, okay, as the prices push higher, we see a retracement back down here, and whenever this high gets taken out, this is my market structure break. This is my market structure break. So I call it as MSB. A lot of people call it as BOS. So this is my market structure break. Now let's say we need to understand this, that this is occurring on what time frame? This is occurring on, let's say this is on daily time frame. So when this is something that we have on daily time frame, what's my next step, guys? What's my next step? I need to understand the trend as of now. This is very simple, right? But this is where things get complicated if you do not be with the right trend. Because what happens is, let's say this is daily time frame, and if I zoom this up, and let's say the prices are right here at the top. Now if this is a swing, this is one swing, how the prices are gonna go higher on a lower time frame? The prices will go up like this, right? The price will go up like this. Let's say this is your 1 hour time frame. This red line is your 1 hour time frame. And now you get a break below, which is this low gets taken out. So this again is your market structure break. But this market structure break is for what time frame? This is for the 1 hour time frame. And where is the price probably going to come down towards? It's probably going to come down towards this particular area. This particular area right here. Okay, so we need to initiate trades around these points, because if the institutions break this particular high, this becomes my origin demand. This becomes my origin demand. So I need to focus on two types of demand zones or two types of supply zones. Number one is right here, the one that breaks the market structure. The one that breaks the market structure. Price breaks above, price comes back down. So this is the point I want to initiate my trades on. Now guys, um, please note that in the third session I'm going to be showing you something very powerful. It's the use of candlesticks. It's the use of understanding candlesticks, and um that is how you will be able to understand the higher time frame and lower time frame structures, and higher time frame, lower time frame point of interest. But as of now, this is very important. You need to only be taking trades on this origin demand. Now you cannot be taking or initiating trades around this point, because if you do so, then there will be a high probability that the prices are eventually willing to come down right here. Now if you just try to understand that, if you feel that there are, let's say, there are equal lows here, there are equal lows here, and if you use the concept that I have taught in the first video, about identifying liquidity. So once you identify this liquidity, you cannot be buying here. You need to make sure that the prices are probably gonna come towards this particular point. So what you will do is, you will wait for the price to create a structure break to the downside, and then you can start looking for shorts around these areas. You can start looking for shorts around these areas. And what's gonna be a point of interest? The point of interest is gonna be the topmost areas of this particular structure break. So most of the time, if you can short from here, it's going to be high probability. But I use support and resistances along with this understanding to make sure that my trades are going in my favor. You need to understand how strong a support is, how strong a resistance is, and I'll cover that in the next videos, guys. So please do make sure that you're watching the series completely. And there's definitely going to be a lot of stuff that I'll be teaching, and I'll make sure that I'll be providing you a lot of value without charging anything from you all, because that's the most important part. That's why this channel was created, and I feel really blessed looking at the response that I get, guys. I feel really blessed, and thank you so much for that. So now this is what we have as of now. Now, this is where you need to understand that only when the structure breaks, because let's say the price falls here, the price goes up, it comes down like this. Now, just because you are at an origin demand or you are at this low that should be protected, this does not mean that you will simply enter a trade here. You need to let the markets shift. You need to let the markets shift higher, pull back down, let it come here around sorry, let it come here around this point, and then you can probably go down to more lower time frame and wait for this, or maybe let the price break above here, and then once you understand that this is where the momentum could kick in, I will enter the trade. because this is an understanding that you need to develop where the momentum will kick in. And once you understand these things, things will become clear, because what you are being taught as a trader is to simply try to enter trades when the price pull back here, but eventually it will simply go down and take out the slow, which you do not want. You need to understand one thing, and that one thing is sustainability. I hope I type it correctly. Sustainability. Perfect. Yes, so you need to understand sustainability. This simply means that this does not means that if, let's say, this is a price falling down, and once this breaks, so you simply go long here. No, you need to understand if this is being sustained, because if this is being sustained for 2 3 candles, and you may see a spike like this. That is important. Once you understand these things, it will become much clear to you all. So here in this case, what is going to be my next step? You need to understand the structures, and you need to make sure that you are trading only daily and 4 hour structures and demand and supply zones. Only daily time frame and 4 hour time frame structures. You can go down to 1 hour structures as well, but guys, please make sure that you are taking trades on the daily and 4 hour, because everything else on the internet, I don't want to say anything against anyone, but trust me, if somebody needs sustainability, if somebody needs to have uh, trades that actually work in their favor, you need to start trading the daily and 4 hour time frame point of interest. Understand this. Doesn't matter if it's a 4 hour time frame order block, doesn't matter if it's a daily time frame order block. If you can understand those order block, and if you can let the price, let's say this is a daily time frame order block, okay, and let's say this is a daily time frame order block, you let the price come in, let the price come in, you see if this low is being protected, then you see the structures. Okay, then you see the structures, and then let's say this is not the day you should be taking trades. What will happen next day? Once again, what will happen next day is, probably as soon as the market opens, you will see the low is being protected, and somewhere here you will see price sustaining above VWAP, and you will get a trade that will go in your direction. That is how my trades are being placed. I always make sure that I am taking the higher time frame into um, like into my analysis, and I make sure that I'm taking trades on the 4 hour and daily time frame point of interest. Anything else is low probability for me. Low probability for me. So now here you need to make sure when you are doing the analysis here, let's say the price are falling down, so at this point of time you should not be the one taking short here. This short will still work, this short will still work, but what will happen is the price will spike up like this, because it is into an origin demand, and you don't want to be a part of this big spike against your direction. Now once you know all of these things, it will become much easier for you to start taking trades in these directions like this. So it is important, guys, that you take trades in the direction of the trend. And what is the trend? And the trend is this. This is how you simply mark things. All right. Now this is gonna be my origin demand every single time. The most important part. So now if I go down right here into this particular chart, as if you see, this has already gone pretty high. This has already gone pretty high. So what is my expectation in Nifty? My expectation in Nifty is that the prices are supposed to take out this high. My expectation in Nifty is that the prices are should be taking out this high. Let me just check SGX. I need to know a few things. All right, perfect. So we were supposed to be filling this order block on weekly time frame, and we are right there. Okay, we are right there. Now just understand, you have never looked at a weekly time frame order block, and this is where a weekly time frame order block comes in place. Now at this point of time, you need to understand what the price does. So what you can do is you can wait, because if you see, this is a structure break to the downside, and this is an area of supply. So if the price is taking resistance around this point, it can fall down like this as well. However, I am expecting that the prices will take out this high. Okay, so if the price is supposed to take out this high, what I will try to do is I will try to initiate a trade that would be in that direction. So now, as at this point, if you see here, what do we have? We have a structure break right here. The price have moved higher, and it has moved higher in a very nice momentum, right? So at this point, we are probably gonna experience some resistance here. We are probably going to experience some resistance here. The prices may also fall down from at this point of time. See, there's a possibility of of this to be coming here as well, if and only if the price is getting resistance here. If and only if the price gets resistance here, it will take out these lows, because this is where the next liquidity lies. So if this is not being taken out, the next liquidity lies here and lies here. And we don't want to be a part of something into a supply zone of daily time frame. So this is what you miss. Just because the prices are moving higher, you are not understanding that this area holds the supply that will easily push the prices down. That will easily push the prices down. And for me, uh, we're not talking about the point, we're not talking about how these trades are to be executed as of now. But let's say you want to take a trade to the downside at this point of time. You're expecting lower prices. So what you will do is you will let this weekly candle go up. Okay, you let this weekly candle go up, you will let the price form something like this at this point of time that will show rejection. And then on the next week, you let this candle close. On the next week, when the price trades back into this candle, you will see that the prices are taking resistance and this high is protected, and you will see that the prices are falling down from there and then taking out these equal lows. So that is how things are to be treated here. And this is very important, guys. The structures is very important. Now let's say if I go to the 1 hour time frame, let's go to Nifty here. So obviously the markets are probably gonna open gap up tomorrow, because it has already crossed 16,200 point. So now let's say, this is, just look at the structures, guys. Once you have a bias, look at the structures. Every single time the price comes back down, look at this particular down move. That is what, this is your order block. This is the 50% of the order block from where the price spiked up. And these are the things you need to understand, that you don't have to be taking trades every single time, somewhere here, somewhere here. That is a different story. That is a different setup that you need to master every single day. Those things are very different from what we see here. If you need to understand these things, you're supposed to be taking trades only at the highest point of probability. And to develop that patience and to develop that understanding, it involves a lot of screen time, it involves a lot of back testing. It cannot be taught in a single day or in a single session. So it takes a year to even communicate these things to my mentees. So that's something very important for us, all of us, to understand, guys, that even just because we have these things doesn't mean that the that we will be able to take trades every single day. And taking trades every single day should not be your goal. Your goal should be to how to take the highest probability trades in our direction. That is the most important thing. Now, yes, so now let's try to understand this one more time. This is where the price fell lower, the structures are coming here. Now understand this. This area will hold a lot of supply for the prices. And 16,400 can be easily touched, right? 16,400 can be easily touched. In this case, once again, I'll remove all the drawings here. Um, yes, so what do we have here? We have an order block, right? We have an order block right here. So 16,400 will be easily touched at this point of time, very easily. And in the last webinar, if you guys have attended my last webinar, I have also told you the exact reason why this is going higher, right? Why the prices are supposed to be pushing higher, and there was an algorithmic reason behind that. So that's how it is. Now, at this point, this is where you can expect to be long tomorrow. You can expect prices to push higher. But how are you supposed to do it is a different thing. Because if and only if the price comes to this order block, it would have been a good opportunity for you to initiate a trade. So now at this point of time, what you'll try to do is you will wait for the prices to create some sort of order blocks. So it should be on the 4-hour time frame, or the let's say this is your daily time frame, right? So just see how nicely this trade worked out. If you could have executed this on the daily time frame order block. Now once we have this, I want the prices to be here. Now, obviously, this is a setup that I'm explaining to you guys so that it becomes easier for you to take trades. Because even if you take 2-3 trades around these areas, and if you master these 2-3 trades every single month, you will start making money. But the problem is when once you start looking for things and expecting things every single day, it won't be a good idea, guys. So now if I go to 4-hour time frame and just see what do we have. So if you see, we do have an order block to which this candle rejected, and this was one of the trades that I was able to initiate. And one of my okay, ignore that, that's not something that we should be discussing here. Now if you see, we have this particular low here. So this low has what? This low has liquidity below it. And if you see, we also have a little gap. So even if the price wishes to, obviously it's gonna be opening a gap up tomorrow around 279. So it's a pretty nice gap up. However, let's say the markets would have opened gap down, so we could have expected this thing. We could have expected this thing and expected the prices to be pushed higher. So that is how we need to proceed, guys. This is an understanding of price. So if you can have this understanding, because I am expecting the prices to be here. Now once I am expecting the prices to be here, i need to be focusing on I need to be focusing on setups that are framed to push the prices higher. As of now, there is no framework. I mean, like, obviously we can take trades. We have been taking trades every single day, and some are going in profit, some are going in losses, but you need to make sure that your losses are small. But to have a very strong and solid setup, it's better for you to let's say if you're trading any other stock and it actually comes down here, so you wait for that price to actually develop in a way where it develops this way and then actually starts pushing higher. Once this objective is clear, every higher high, higher low that you see here could be traded towards this particular point, and that is how a trade needs to be executed. All right, so I hope that you will be taking into consideration the market structures, and you understand that these points are very important. This is need of urgent supply. The markets can fall down, but for the next 3-4 months I am expecting some bullishness in the market. So I wouldn't expect you all to be taking shots as of now. But yes, so there's a link down in the description, guys. You can check out the discord server. You can check out my telegram channel. You can also reach out to me on my telegram account, guys. I'll try to reply as much as you can, and I'll try to be active on the discord server as well. It becomes really like time consuming for me to be making videos, making Instagram posts and all of those things, and then handle mentees as well, guys. So I'm really sorry about that, but I'll make sure that I'll be uploading 2 to 3 videos every single week so that I provide value to you guys. Alright, so I hope you like the videos, guys. So make sure you like this video, share this video as much as you can, and don't forget to subscribe to the channel. Thank you so much, guys. Have a nice day.